Good afternoon, everyone, and welcome back to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it looks like a happy end to the Dussehra season, Santo, after the initial turbulence that we had seen over the past 8 or 9 days. But clearly, there seems to be, some bit of recovery in risk appetite of investors. If you look at the Nifty and Sensex, they look all set to end near the day's high on the back of what has been a very strong what have been very strong cues from the global markets. US stock futures, European equities, all of them have been surging on the back of basically receding concerns over any sort of a credit event in the market or financial stability risk, Santo. And I think what has added to the sentiment, of course, is also earnings. I think the strong quarterly earning updates that we are seeing from the like of HDFC Bank, 24%, almost 24% year-on-year growth in lending from HDFC Bank, IndusInd Bank 18%. You look at some of the other companies who have been coming out with their quarterly updates, and it looks like that June was a September was a very strong quarter.
Well, in CJ's version of Dussehra for the stock market, it's a triumph of good over evil.
Yeah, absolutely. I was going to add it, but I didn't want to be cringe-worthy.
Okay.
I didn't want to be cringe, Santo, so I thought that I'll not add it because then you will judge me. But yeah, it is exactly that.
Okay, that's so you say. But well, CJ, let me warn you, this from the look of it, it seems to be more of a relief rally at this point, given that overall the scene in global markets is it's still not settled, actually, if you ask me. Maybe the credit event may have passed, but that still doesn't obscure the fact that you still have many other issues to contend with at this point in time, especially the strong dollar. That could be a problem for other emerging markets in the days to come. And that said, focus probably here could now shift to some of the sectors that have not done so well recently. Yeah. You might see some bit of bargain buying. We're already seeing some bit of it in stocks like pharma, IT to some extent, where I think given the underperformance, probably valuations are not so demanding, but I still would be cautious in this kind of a market, CJ.
Well, Santo, your caution is, of course, totally merited from your point of view, but that's
legendary. I thought
legendary. Of course, it is legendary. I mean, it's permanent also. It never changes. Anyway, let's quickly move on to some of the stocks that were buzzing in trade, and we had a lot of picks to be had, but we boiled it down to 5.
Yes, Mahindra and Mahindra Financial is the first one. Now, CJ, the stock had taken a pounding just 2 weeks back after the RBI directive following the unfortunate event, and that also was justified in its own way, whereby it barred the company from the use of third-party agents to recover loans. Now, that resulted in the stock falling quite a bit, but today it's been one of the biggest gainers, and partly aiding sentiment could be the fact that the company has come out with a very strong second quarter update, improvement across on all parameters. You've seen the gross NPA coming down from about 8% to 7%. Disbursals have gone up 9.1% month on month, and for the quarter as a whole, it's roughly up about 24%. So it looks like maybe investors will once again start warming up to the stock. Already you have many brokerages which are positive on Mahindra and Mahindra Financial at this stage, and to that extent I think it's a bit of a crowded trade, as you would call it in market parlance, but nevertheless, given the kind of selling that we've seen over the last couple of weeks in particular, maybe you could see some more short covering in the days to come.
Well, Santo, your points are clearly valid, especially on the fundamental side, but my general feel is that, if you compare the performance of NBFCs vis-a-vis banks, it clearly shows that market has a preference at this point of time, and that preference is to first buy lenders, and then if you can't find value, then you go lower in the chain in that sense. And therefore I feel that probably NBFCs, while they may perform, I don't think they will be outperformers of major quantum compared to the lenders out there or the actual banks out there. Apart from that, they are also facing risk of market share loss in many of the retail segments that they used to dominate once upon a time. I mean, if you look at some of the recent data that has been coming out with respect to retail credit, clearly banks' ticket sizes are going down when it comes to retail loans. Now, these used to be segments where NBFCs used to be the dominant player because of the wider reach they had earlier, but now clearly banks are utilizing or leveraging technology to reach to the last mile, and therefore it is becoming a competing ground for both banks and NBFC, and they're competing in the same space. And given that banks generally tend to have a bigger advantage when it comes to deposits and funds compared to NBFCs, I feel that there is a risk of market share loss for NBFCs. Apart from that, of course, let's not forget that the cost of borrowing also is going up for a lot of the non-deposit taking NBFCs, Of course, deposit-taking NBFCs do still have some, things going for them, but non-deposit taking clearly are facing a higher cost of borrowing, and that could affect their margins as well going ahead.
Well, that bit of personal touch when it comes to NBFCs, I think it is pretty much there. Although the general feeling is that maybe banks are now giving. Of course, there's no doubt that banks.
One of the most perfect examples is the gold loan segment, where two NBFCs used to be the most dominant player, and nobody thought for years that they could ever be touched. But now you're seeing some of the smaller lenders like a CSB is actually coming into that market and eating up market share there. So clearly, I think NBFCs are in for a very tough battle, and not only just from private sector. I mean, it's the PSU banks which are also flexing their muscle in the market. Well, Santo, the next stock from my end is from the stock market itself. Well, it's the stock broker, Angel One, and clearly, I mean, doubts one side and then performances on the other side, Santo. And if you look at the performance for the second quarter, the company's business update that came out, very, very strong numbers. Strong client addition in the quarter, I think upwards of 3.5% of growth, month-on-month growth in client addition for the company. There was also very good growth in order book as well, Santo. So clearly, participation level increased during the month of September in the market from the retail end, and the brokerage ended up benefiting from that. Apart from that, the very crucial aspect that really stood out for me, Santo, is the fact that the company has managed to gain about 4 basis points in overall equity segment and about 5 basis points in the F&O turnover segment. So clearly, Angel One as a broker is making good strides in the market, probably at the cost of other brokers out there.
Well, CJ, I would still keep my powder dry at this point in time. Reason being, client addition is not so difficult. Ultimately, it's how much business the clients
and hence the growth in order book. I think they've seen double-digit growth in order book on a year-on-year basis, which is very good.
Well, order book,
it could be a monthly phenomenon.
No, but order book again sounds a little vague to me. CJ, they're not mentioning anything about earnings. Now, as for increase in market share, CJ, the pie itself has been shrinking. So you can lose market share in a market that is growing and still do well. And conversely,
absolutely.
You can increase your market share in a market that's probably shrinking, which has been the case clearly with both equity and F&O volumes, which have been sharply lowered compared to what we have been seeing about a year back. So all these numbers, I mean, they may sound good optically, I would say, increase in client addition. And let's not forget, in June quarter, the company did just about marginally better than what it had done in the March quarter in terms of its top line. So that slowdown kind of is clearly reflecting.
Yeah, but I think also, Santo, we have to also keep in mind that June quarter, of course, market performance was pretty bad compared to the September quarter. The September quarter has seen the major part of the rally, and the major part of the correction also has come in the month of late September and October. So therefore, I think given the upswing that we had seen in the market, maybe sequentially you could see a better performance in the September quarter compared to the
We'll
June
see
quarter.
About that, CJ. Maybe I'm wrong, but you have not seen the stock price anywhere go.
That is why I said
April
I said stock performance one side and business performance on the other side.
But ultimately, everything towards an end, right?
Yeah,
you need the stock to perform, don't
clearly
you?
the market has to catch up.
Yes. Okay. Well, next stock on our watch list is Coromandel International. Again, fertilizer companies have had a decent run during the latest rally in the markets. And according to Elara Capital, demand for fertilizers has been quite strong pan-India, and even in some of the rain deficit states of north and northeast, farmers have been stocking up on fertilizers for the next crop, that is largely mustard, potato and wheat. Also, fertilizer companies are benefiting from a slight easing in prices of phosphoric acid. That's been a major plus, and they're planning to import, which gives them additional benefit in terms of what the prices that they would pay locally. Coromandel clearly has been one of the star performers in the sector, and it looks like this trend could continue for some more time.
Well, Santa, I'm not so sure. I mean, in terms of margin, I think the margin pressure could probably still remain for the fertilizer companies even in the September quarter. That is largely because even though they are facing higher raw material costs during the quarter, that cost was not affecting them directly because they were getting it through the offsetting it because of the higher subsidy that the government was paying. But because of the higher subsidy, their receivables end up going up, and that indirectly adds to higher finance costs for them, and therefore affecting margins. So I think on the margin front, it is possible that we could still see some weakness, but the market's view is that clearly margins may have bottomed out in this quarter, that is the September quarter, and from here on we could see an improvement. We'll have to wait and see how that pans out. Another thing that will be important to keep an eye out on Santo is the sowing pattern for the Rabi season that is upon us. Whether we see some sort of weakness that we had seen in the previous season, because if you remember, paddy sowing had actually fallen on a year-on-year basis this season. So whether we see any sort of similar weakness, that could of course have an implication on demand going ahead.
Well, Coromandel June quarter numbers itself was quite strong, CJ. It was a blowout quarter in that sense, record turnover.
Yeah, I mean, clearly fertilizer companies were also benefiting from upswing in international fertilizer prices as well at that point of time.
Definitely, and the fact that crop prices have been firm is also encouraging farmers to go and spend more on fertilizers.
Possibly. That said, the last stock on my radar today is from the chemical space, and this is Make Money Fine Chem. Well, the stock was higher by almost 6% at one point of time, largely on the hope that it could see a very strong demand season going ahead. Also possibly some bit of market share gains in the methylene chloride product that it is one of the biggest producers here in India. Now, why the stock rose is basically because the world's largest manufacturer of this commodity chemical, Santo, is Olin Corporated from US, and they have decided to close their German plant, which is one of the biggest plants out there, along with the Texas plant that they're anyway going to shut by the end of 2022. So the fear is that capacity for methylene chloride is likely to fall going ahead, and because of the withdrawal of Olin, it could lead to opportunities for companies such as Make Money Fine Chem to capture a little bit of market share and at the same time benefit from any sort of upswing in the chemical price going ahead. And I think that is why you are seeing a very, very strong reaction from the market, with the stock higher by almost 6%.
Well, the stock has been doing well, and overall outlook on the chlor-alkali segment, which is the mainstay of Make Money Fine Chem, the outlook there is pretty bullish if you speak to analysts there. The slight worry from a slightly more longer term point of view is that the company's ambitious targets. Now the company is looking to double its revenue, not exactly double, it's targeting revenues of close to about 5,000 crore by end of FY27. Now that will mean a lot of capex, and already the company's borrowings are fairly on the higher side. According to Edelweiss, the company has about gross debt of about 990 crores, which is about 1.9 times its EBITDA, of which 221 crore will have to be there in the form of preference shares, which will have to be repaid over the next 4 to 5 years. So already the borrowing is fairly high, and while the company is saying that it intends to keep the ratio at under 2, given that it's at a very high ambitious turnover target by FY27, that will call for a lot of investment, and that capex then could put pressure on the margins in the near term. Now the company's turnover has been growing at top line has been growing at about 32% over the last 5 years compounded. That's quite good, but profit growth has also been around the same level itself. The margins have been decent in the last couple of quarters, but in case the company were to go for its ambitious capex plans, then maybe you'll see some bit of pressure on margins.
A company like Make Money has to go through that capacity expansion, or else I think not going for it probably would be a worse outcome in this case.
Definitely, but then the question is, what are the kind of valuations you would be willing to pay for what kind of margins?
Well, I'm sure if the capacity addition is timely and there are no delays, Santo, and the market share that they could gain on the back of that, I think the market will be willing to pay a little bit of a premium.
Well, last stock on my watch list is SBI Cards. In between, again, CJ, there was a bit of change in sentiment for the better after the stock had fallen to below 700 rupees. But it's now evident that beyond a point, market is not willing to pay a premium for SBI Cards, and good reasons. Rising interest rates, never a good thing for a credit card company. Secondly, there is still some bit of uncertainty over RBI's stand on merchant discount rates, and if that were to be not in favor of credit card companies, it would severely hit a company like SBI Card, which is largely into monoline business, which is credit cards is its only business, and if it takes a hit there, that clearly will immediately reflect in the bottom line. This is not factoring in the competition from the buy now pay later segment as well, which again is impacting demand for cards. And remember, in a rising interest rate, fewer people tend to revolve their credit, which is again a major source of earnings for credit card companies.
Well, Santo, I think I mean, yes, you have been pointing out a lot of the issues that are surrounding the credit card industries, but for me, I think SBI Card still remains a very decent play in this market. If you look at the September season, the September quarter itself is festive period. Generally, you tend to see good growth in credit card spends during this period. Now, if you look at the August data, I mean, we don't yet have the September data, so I'm basing it on the basis of the August data that we have that I have with me. And if you look at the August data, Santo, there has been improvement in market share for SBI cards, not only in in terms of credit card spend, what every customer is spending from his or credit card, but also in the amount of cards that are in force in the market. So clearly, this is one company which is growing quite aggressively and actually marketing itself quite aggressively to get a larger market share out there. And I think overall, in the longer term trajectory of this market, credit cards is a consumer business, and with a growing economy like ours, where per capita income is expected to go to almost $3,500 per person, by 2030, compared to about $2,200 right now, I think clearly investing in a consumer business is probably going to pay out quite well for you.
Well, and let's quickly take a look at the market at this point. Overall, the strength which we've seen in the morning is still very much evident, and in fact the market has built on it again. Nifty up by close to about 400 points at this stage.
Yes, and almost 2.3% up move.
Sensex is up 1,265 points. A tremendous wave of short covering there, I would say.
Yeah, I mean, it is short covering, Santo, and you can see that in the India VIX index, which is basically gets its value from the option premiums or the put options out there. And of course, in a falling market, people will buy a lot of put options, and therefore you can see the VIX climbing. But in a rising market, people tend to get out of those positions and they start buying a lot of call options, and then you see the VIX actually fall. And you can clearly see that in the action in the VIX, 8.5% decline. So basically, the entire credit event of yesterday, the entire fracas over Credit Suisse and Deutsche Bank, the market has erased all of those losses and is now actually sitting higher than those levels. Santo, interestingly, the mid-cap space is doing even better. The Nifty Mid-Cap 100 index is higher by about 2.7%, while the small-cap space is lagging behind a little bit, although higher by about 1.8%, but clearly underperforming both the large-cap and the mid-cap peers. Sectorally, every sector is in the green at this point of time, and a lot of them have seen short covering. The Nifty Metal is higher by 3%, Nifty Bank about 2.9%, especially on the back of that earnings update from HDFC Bank.
Well, and what are the key things that we need to keep an eye out for?
Well, Santo, of course, a lot of speeches from central bankers. So clearly, if you think about the two most important will be the ECB chief, Christine Lagarde, speaking later in the evening, as well as some of the Fed members, almost 2 or 3 Fed members will be talking today. So clearly, that will be something that the market will keep their eye out on. Apart from that, also watch out for the US job openings data for this month of September, another critical data point in terms of where the job market is in the US, which has been driving the interest rate decision of the Fed. Apart from that, I think there's not much, of course, tomorrow globally as well. When Thursday we come back, of course, we'll have a lot more to discuss.
Well, and with that, we hope you enjoy Dasara festivities tomorrow, and we'll be back again on Thursday. So till then,
yeah, of course, keep commenting, keep letting us know what your feedback is, and keep following us on the social media links that you can see at the bottom of your screen. And of course, for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again on Thursday morning, 9 a.m. Have a great Dashera and have a great day ahead.